What's up, traders? Welcome back to the channel. In this video, I'm going to show you guys a strategy that can give you up to a 95% win rate if you were using it properly and on any market. I'm talking about forex, stocks, crypto, futures, and any time frame from the 1 hour, 4 hour, 15-minute, or even 5-minute time frame. So if you guys want to learn this strategy, keep watching this video. And also at the end of the video, I'm going to show you guys how you can customize that strategy and make it even better and easier to use so you have the simplest time trading in the markets. All right, guys, let's get into the strategy. The first thing we want to do is we want to add the RSI indicator on our chart. So it looks like this. It's called the RSI indicator, Relative Strength Index. To get it on your chart, all you got to do is go to Indicators, type in RSI, and it should be the first one, Relative Strength Index. Click on that, and it's going to be added to your chart. Once we have the RSI indicator on the chart, now it's time to get into the actual strategy. So the first thing you want to do is you want to start drawing up your supply and demand levels. If you don't know what supply and demand levels are, they're basically just areas where people are buying and people are selling based on psychology. So for example, over here would be an area of demand, because you can see that every single time that the price came back down to this level, the price shot back up. So normally, as a human being, if you see this happening once, twice, 3 times, 4 times, you'll most likely expect it to happen a 5th time as well. It's just human psychology. So that's what we want to do. We want to mark up areas of supply and demand on our charts. So this is an area of demand, and an area of supply would be something very similar to over here, where we have every single time the price went up this high, the price fell back down. We can see it happening 4 times. Once, twice, 3 times, 4 times. That's pretty much it for supply and demand. Once we do that, next what we want to do is look at the RSI and see if it's overbought or oversold. So our entry is extremely simple. We can see that the price over here gave us a demand level, and we want to make sure that we have at least 2 touches on our demand level. So we have 1, 2, 3, 4. So for example, here we could have taken these trades. We saw that we have a demand level over here. We could have taken a trade over here when we saw that the RSI indicator was oversold, which indicates us that there is potentially now time to buy before it goes back up again. Our stop loss should be always behind the order block / supply and demand level. And for our take profit target, we want to target either 1.5 risk to reward ratio or a 2 risk to reward ratio. So something similar to this, for example. This would have been one of our trades. We could have taken that same exact trade again over here, as you see, because again, the price came back down, it hit the oversold level, and then went back up. And we could have taken it another time right there. These all would have been winners. All we're doing really, again, is just making sure that we draw up the proper supply and demand levels on our charts, and then making sure that we look at the RSI and we want to get in when it gets oversold or overbought. Let me show you guys some examples of this. Okay, so here's a quick example. So right now we are looking at our chart and we see that we have a demand level here at the bottom and a supply level here at the top. We see that the price came back down here, went back up, touched it again. This created our 2 touches. Then we got another 3rd touch over here in this area. This confirms our demand level. And up here, we have a very strong supply level as well. We can see that the price came back up, went up, touched it again, went back down, touched it again, right? So this gave us, again, a good supply level. Now what we want to do is simply just wait until the price comes back down into their order block over here, or goes back up into an order block over here, and check the RSI until it's oversold or overbought before entering a position. So let's see what happens here. The price goes down. We're waiting for the price to go back down into that area. It looks like it's trending that way. Boom. We have our price go back down into our supply level. And over here, we see that we have a oversold RSI. This is where we can enter our trade. We enter it like this. We're going to take our stop loss and we're going to put it slightly behind the last swing low or behind the last order block. So basically the demand level that we have right here. and we can target a 2-to-1 risk-to-reward ratio, something like this. Or even if you guys like, you guys can make a 3-to-1 risk-to-reward ratio. It's really up to you. I personally think a 2-to-1 risk-to-reward ratio is the sweet spot for me for this strategy. Then we take the trade and see what happens. Look at that. It's a winner. That's exactly how we take this trade and how we use this strategy. Let me show you one more example. So here's another example of this strategy. This time I may look for one that's a little bit less obvious when it comes to trading, because we're not always going to have very obvious charts when it comes to supply and demand level. But we can see over here, we had a hard time breaking this level with the amount of candles that was given and was not able to break above this supply level. Price came back down and touched it twice before saying, nope, we can't break it, and then went back down even further. And now it's going back up into that area. So we can see the price came back up. We approached a overbought level. And then over here, we're just going to go short. Very simple. We want our stop loss behind the order block, behind the supply level. And again, we just want to target a 2-to-1 risk-to-reward ratio, just like this. And then we simply just take that trade and see what happens. We see the price consolidated a bit, but eventually hit our take profit level. And over here, even we could have probably taken another trade because it is approaching an overbought level around this area. And we can see that the price went back down like crazy. And that could have been another very good trade. Very, very simple strategy to use, and it's completely free. But now everyone knows that drawing up the supply and demand levels is a little bit subjective, and it can be a little bit harder for beginner traders. That's why I'm going to show you an indicator next that can seriously help you with these levels and help you with your trades, because it gives you a lot of tools that you guys can use in your trading. Okay, so here's the indicator I'm talking about right now. It's called EliteAlgo. It looks like this. This is the settings for it. So what this does is it gives you a bunch of tools that you can use in your trade. So for example, it automatically draws the supply and demand levels for you on your charts. So if you're a beginner or intermediate trader, you know that you have the best supply and demand levels directly on your chart. So for example, these are the supply and demand levels, these little boxes right here. And it even tells you if these supply and demand levels are more bearish or bullish. So for example, we got a very good demand level over here that got touched in an overbought level. So we could have taken that trade again using this simple strategy. And over here again, the price went back up and touched it, and it was overbought again as well. We could have taken that trade again using this very simple strategy. And not only does it do that, but it also gives you the buy and sell signals that you see on the charts right here that you can use as confirmations for your trades as well. So for example, if you're using the RSI over here to signify the overbought level, and you're using the strategy I just showed you, you can also use the sell signal right here as an extra confirmation that that's going to be a good trade. And same over here as well, guys. And not only that, these are all the different things that it could do. It has consolidation zones, so it shows you when the price is consolidating, support and resistance levels, auto trend lines, a bunch of different features. Even has take profit and stop loss recommendations for you, and this market panel that shows you exactly what's happening, like the current session you're in, and if there's a lot of smart money in the chart that right now you're trading. If the market stays trending or ranging, it shows you the time frame, if they're bullish or bearish, using the green or red colors. So all of that can help you make incredible decisions when it comes to trading. If you guys want to learn more about this indicator, I'm going to leave a link in the bottom below. Other than that, guys, that's the strategy. If you have any questions, comment down below, and I'll answer every single question that comes my way. Also, like and subscribe, because we are going to be doing a $500 giveaway if this video hits 500 likes, and the giveaway will be given to one of our lucky subscribers. So thanks for watching, guys. Have a good day.